It's Sam from Investors Underground here. We're excited to be launching a new podcast called Trading Takes, where we'll be discussing recent events, current thoughts on the markets, and absolutely everything in between. I'm joined by Chris and Judah. Guys, how you doing?
Doing great.
Doing well, thanks.
Good. And obviously, this was the brainchild of the three of us. Perhaps just to kick it off, just introduce yourself and perhaps tell us a little bit about why you wanted to be part of the show.
Sure. So I'm Chris. I'm an equities and options trader. I do content for Investors Underground. I've been an active trader there for a while. And the whole point of doing this show, or what we were thinking, is we wanted a place for traders to really talk about current events, things that are happening in the markets, and not just from one person's perspective, but from different people's perspective and people who have different strategies. So we came up with like 200 names, trying to narrow it down a little bit. And we finally came up with Trading Takes. And the whole purpose of that name was kind of a dual meaning of not only are we, sharing takes on the market itself and different setups, but also trading takes with other traders and kind of sharing our perspectives.
And Judah, over to you.
Yeah, I'm Judah. You guys probably know me in IU as Divided Champ. I focus primarily on news and momentum on the long side, both swing trade and intraday, but primarily on the long side.
Cool. And your thoughts on and your ideas coming into the show and why you wanted to be involved?
Yeah, I think we just need a place to discuss the markets, current events, charting, just risk management, liquidity traps, all these types of new concepts to certain traders. They have no place to really learn about it in real time and live. And I think that it's also good to hear about certain trends from people knowledgeable in that field. So we plan to have guests on hopefully every week that have to do with something big that has happened in the markets.
And speaking of guests, it wouldn't be the launch of an Investors Underground show if we didn't have the main man himself. So, Nate, welcome to the show. How are you doing?
I'm wonderful. How are you?
Good. No, I'm great. Thank you. So tonight, there's lots we want to cover. We want to talk about current market events. Obviously, this week has been huge. Everyone's been talking about Bitcoin ETF. There was the SEC blunder. We also had the tragic Boeing accident at the weekend. There's also NVIDIA. There's also my personal favorite news for the week, Tiger Woods. We're also going to look into 2023 trends, look into what we're going to look into this year, some goals, and then hopefully get into a bit of a heated discussion later on and debate a few topics. So I think let's kick it off with the news of the week. I think, and what everyone's been talking about has been Bitcoin ETF. And I think as a side plot to that, the SEC blunder. So guys, what's your take on this ETF this week? Obviously, the news was finally announced today on the 11th of January.
Man, what a fumble by the SEC's Twitter. And I think a lot of people were speculating that they had that kind of queued up, ready to go. Like, because they tweeted that, it's been approved and everything. And then they kind of redacted it, or Gary Gensler of the SEC said that basically we've been hacked, the account's been compromised, and that we didn't actually approve anything. So, a lot of people were kind of wondering, like, is this going to be a sell the news event? And so we kind of got like a retake of it, because the first time, they said it was going to be approved crypto and everything spiked on it. And then it sold off really hard. And people didn't know if that was because the news was fake or if because it was a sell the news event anyway. So it was just total chaos. And then we had kind of a repeat of it the following day. So it's been a wild time for crypto with news.
Yeah, and on that, Nate, you shared a tweet that I thought was quite funny about from the SEC. And I think they're basically saying only trust information that comes from the SEC. And then we get that tweet, and then obviously the immediate redaction. It was funny, right?
Yeah, and they forgot to do the two-factor authentication. So that's a very easy thing. I can hardly log in. I got to remember my password, then get a text, then put that in order to log in from a different computer. So I think it's a pretty simple solution.
Yeah, that's the weird thing. Sorry, excuse me. And Judah, what did you make of this week? And Bitcoin?
Yeah, I mean, we just have been trading in that same range. Nothing really happened. We broke out, a few days ago, slightly, and then it's just been like holding up since. I think we knew about this from early December, that they were going to kind of approve it and that it was going to go along. And we had quite a run up from that $25,000 breakout. We pretty much doubled or nearly doubled. And I mean, today was just a nasty day for Bitcoin and related names. I think Mara had like the biggest range it's ever had today on a percent basis. And it was nearly hitting like all-time volume. And like that's something to, you could look at these stocks and like get an idea of what Bitcoin can do as well. Like they go hand in hand. And I mean, today's action, it didn't really look so great in my opinion.
Yeah, and in terms of, you mentioned Mara, Riot, and Nate, you always talk about trading vehicles, and they're just the trading vehicles for Bitcoin, right?
Exactly. Mara, Riot, and CLSK is typically my top three that I would use. And I think, I think today was a good example of, yes, that solid news, but everybody kind of was coming in with that. So it actually took a few minutes for that to happen, maybe about 15, 20 minutes. So almost to the point where you kind of second guess everything. And then it started to come in. So it ended up being a really good opportunity. And as you said, yes, those are the vehicles that I prefer to use rather than, maybe the ETFs, things like that. You can leverage like crazy on those, whereas typically ETFs you cannot. Plus, as Judah said, the range is just incredible. So there's been a lot of premium built up. These things almost trade in the same sense of like an ETF, where it starts to build up a premium as it's going in one direction. I think it's like called backwardation or something like that. But as that premium comes off, and whether it's the options, whatever it is, as soon as Bitcoin starts to pull, I mean, it just gets heavy. And so as long as we're in that downtrend, as long as we're either sideways or lower and we're not breaking out the highs, Mara will continue to kind of shed that premium that it had built up.
The interesting thing is that it wasn't so random. Like Mara actually had a long setup there coming into today's open. So I know a lot of people on Twitter that are long swing traders that have taken this on the long side off open. So that probably trapped a bunch of longs as well, on top of the sell the news event. And today being that day, there was a lot of new longs in there today from that breakout. If you look at the chart without the bottom half of the candle, it was a clean looking breakout. I mean, it looked like it could have hit new highs over the next, few days or week, but that was just another reason of why it could have sold off so hard.
Yeah, and on that, when are you guys? So when do you buy the news and when do you sell the news? Because I think even Kramer said this was a sell the news event, which usually is a good sign. Probably not a good sign that it's a sell the news event. So it's good to you, Chris, first. So when are you selling and when are you buying?
Yeah, so I think the overall theme of like buy or sell the news, that's like once the news drops, what happens after? So it doesn't necessarily mean that traders have to come in and trade the news as soon as it's dropped or anything. So really buy or sell the news, as traders, we're waiting for a right moment in time. And so if everything's really, bulled up and, there's a bunch of premium built into some of these names and there's options and everything, and then all of a sudden Bitcoin really, starts to drop out, we don't have to try to trade these things when the news hits. We can wait for a moment like that where the news has come out, there's a big spike, and then all of a sudden, a key variable that affects these things drops out, and then we can kind of be prepared for multiple scenarios. And it could be the same thing if it were like if Bitcoin sold off immediately on the news, and then all of a sudden Bitcoin starts ripping back up, and there's a bunch of put options and everything, and people pile in short. So, I mean, just the way that I approach things like that is I'm constantly watching and waiting for a moment in time where, someone's offsides and something changes and you can kind of capitalize on that.
Mm-hmm. So when you're coming into this trade then today, as an example, do you have like a few plans in your head, or have you already got a fixed idea of what you want to see and the actions you're going to take?
Yeah, usually I have at least, if it's something that could have great range on both ends, then I usually have a plan. If something dips and then I think it could rip, or if something's ripping and I think it could dip. With Mara itself, I had calls yesterday. I was trading them throughout the week, but I had some calls the previous day before the news dropped. And so on the open, when you had that spike up, and part of the reason why those spikes happen is because off the like you can't trade options after hours. And so if there's some bullish news or something, Bitcoin's ripping and all these names open up higher, people pile into the calls off the open. And then in order for the market maker to hedge those calls, they have to buy stock. And so you get this sudden lump of everyone buying at the same time. And that's why you have this, spike or drop usually within the first 15 minutes of the day, because that's that market on open. And so I had some calls and I sold them into that initial rip. And then I actually tried to do some dip buying on Mara after the initial sell-off. And that didn't work out because I didn't realize that the range was, not going to be down 5% or 6%, but it went down 17%, just from Bitcoin basically going from the premium of what it was at back to the price that it was at when all the news dropped in the first place. So,
yeah, that's a great answer. And Judah, I guess same question to you. When are you buying and when are you selling the news?
So generally, most people like to sell after the news. And it's funny because you don't know what it's going to do. So generally I like to sell before the news and buy after the news. And it depends how big of a news event it is. Like this was obviously a big news event. So what I want to see is some building first before getting involved. But generally, if the news is really positive, it's not going to be a one-day move. These things could build over months and weeks, and it could start a whole new cycle. So there's no rush. You want to see something build. You want to see a breakout. And that's when I usually like to get involved.
Mm-hmm. And Nate, you're obviously extremely prepared coming into today. So yeah, same question to you. And how did you trade today's events?
Yeah, I was a little bit late to the short. I actually tried it a little early, maybe like 5-10 minutes after the open. And then I got out and I just waited. And I'd rather be a little bit late, confirm my thesis, let it start to pull back, get heavy, and then I started to scale in. So I had one initial position, and then I started to size into the trade from there. But like Judah was saying too, and Chris, this is a big event. So a lot of times we focus on this like micro time frame of trying to nail it, but this is one of those that you don't need to be the first thing. You don't need to nail the top, because the meat of the move is going to be so huge that you just need to be patient and get a good entry and then scale in if you're, on the right side of the trade and let it work for you rather than just trying to figure it out throughout the morning. I think too many people try to nail it. Okay, news is out. Let me react to it. And oh no, it's going higher. I thought it was going to be the sell of news. So now you're working from, behind. So I just think sometimes let the market absorb things. And yeah, sure, maybe you don't make as much, but you also don't get chopped up in the meantime.
Yeah, and this is probably a really silly question after what do we finish, like minus 17-18%. But coming into today, was it like a super obvious sell the news event, or did you think there was a chance actually we could have broken through 50 or whatever?
I was thinking that we could potentially go 50, 52 and then potentially pull back. My thought was that it would be a gap up and push on the news. This is my thoughts kind of in the next maybe 2 to 4 weeks. But I was thinking gap up, sell the news, and then just a slow absorb over the next couple of weeks, and then slowly head back up towards that, towards the highs. Now that new money, fresh money is coming into Bitcoin.
Right, yeah. And Chris, Jude, I don't think either of you want to jump in on that. Do you think it was the super obvious event today?
No, I really don't. I like Nate's saying, I think it's good to come prepared for, if you have something that you think could happen, to have a plan for that. But just in general, just looking at it neutrally, I don't think a lot of things are very obvious right now. You have, after 2023 and, the market it's really changed. You have a lot of new participants in there. You have more short sellers now. You have things that react differently to news. And so I really don't have strong biases after events or anything. I try to be radically open to, whatever happens. I'm not surprised by it, but I just want to have some kind of a plan. So if it happens, if it, gaps way up on it, have a plan to either ride that or to fade it. And the same thing if it gaps down. But yeah, I don't think a lot of these things are very obvious. And I think that's been more of a change, towards the later half of 2023 and the beginning of 2024, because you have a lot of new participants in the market, and different people and different institutions trade differently than they did a couple of years ago.
Yeah, I would even echo that all the way to like small caps too, because there's just so much good information now, and you don't have to try very hard to get the same information that people had to, sift through filings for hours for. So everybody's on the same page right away, especially in small cap land. So same thing. You could have news that's expected. You could have delusion that's expected. And then everybody is just on the same page that fast. And if it stops going down, guess what? It's going to go the other way extremely quickly. And so the same thing with this. You can have every plan in the world, but at the end of the day, you don't really, who knows what way it's going to go.
Yeah, that's a great answer from you both. And it's funny though what Chris said, because coming into the market with an open mind and the potential to perhaps press either button, whether you want to sell or buy. But that's something that people like weirdly criticize you for at times, Nate. Yeah. When you're like, oh, if it flushes, I'm going to look to buy it. Potentially, if it rips, and people are like, well, you think
it's right either way.
Down. Yeah, exactly.
But that's not the point. The point is you're going to be prepared either way.
Yeah.
And that's the entire point that they're missing is it's better to come in and have two plans. All right, if it were to rip up, what are the key levels? What are the ranges that I'm looking for on this side? And if it were to flush, what would be a good level that I potentially would get long? If you come in, then you have, a much better opportunity for a trade.
Mm-hmm. Yeah, absolutely. And just to finish with you, Judah, do you think it was obvious?
I mean, I try not to anticipate. So I'm just like trading the technicals and the chart and what happens. And once, we broke down in the morning, there was nothing there for me anymore. Mm-hmm. And if I'm getting involved in a chart like that, I want to see 2-3 days of aggressive sell-off. So if we do decide, over the next day or two to sell off more sub 20, maybe 16, 17, then I would look to trade that, mean reversion long. Yeah. But today, I mean, it didn't really provide anything, worth taking on that long side. It just kept grinding lower. And I mean, it didn't really provide that entry for me. So I try not to anticipate. I just trade trends, and the news is just, something that happens to move the stock, but it doesn't really affect my mindset on it.
That's a great answer, because we had, like with Mara, we had exactly that recently, where I forget the level we broke through. I think it was like 30, and then we pulled back for a few days, and then we built again into this event today. But no, great thoughts on Bitcoin, and yeah,
I think that's important too, Sam, because everybody got rewarded for just buying the dip last time, right? So then now this time it comes down again, they're buying the dip, and if it does not bounce in the fashion they think, that's a lot to unwind, yet again. So there is a good chance that, like Judah was saying, I mean, the long side, this might need to digest for a couple of weeks. This move, there's going to be a lot of head fakes. It's going to go, it's going to start to go and it's going to fail. It's going to start to fade. It's going to come right back up. So I think we just have to let it consolidate, figure out which way it's going to go, find a new base, and go from there.
Yeah, absolutely. And that's great thoughts. And also this week, I still find this, and this is probably like the absolute miss of 2023, and maybe we'll come on to it. NVIDIA breaking through 500 pretty cleanly, just monster. It's just such a huge move, up like 400% in what, a year and a half or something. Chris, Judah, did you see this coming?
Yeah, I mean, I'll put it this way. I'm not surprised that, especially during 2023 when capital got very competitive, when there's a bear market or anything like that, one of the first things that happens is that capital goes to just the highest quality things. And so what does that mean on Wall Street? It's usually things that are something that a hedge fund or a fund can pile into. So it's large. It has explosive growth. It has very active options, so they can hedge and do things like that. It has a current theme. So we had AI, and you had the supplier, and you had a bunch of different things working in its favor. So I'm not surprised that it was a big winner in 2023. And then when you have a large stock like that retesting a level, that 500, and it tested it, I think 5 or 6 times over the last few months. I think a lot of traders are used to seeing things like that with small caps, and the same price, the same movement in a large cap like that, it's going to be different than small caps, because funds and things like that, hedge funds, they don't move in and out of stocks the same day like a small cap trader would. So if you have something where it's pressing up against this 500 level and it, bumps up against it, it has a higher low, and it keeps going, eventually the bids are going to stack up, and you basically have people absorbing the float. And then you have eventually this break, and then all the options come in, and you can have an explosive move off of a multi-month setup.
Mm-hmm. And Judah, what about your thoughts?
Yeah, I think this was building for a while. Same with Meta and Apple and all these stocks and Amazon that were coming in from the lows in 2023 and have just been grinding higher. And it's just been putting in this long base. And I think it helps to move out to longer timeframes to see that. Otherwise, it just looks like chop. People are looking at these things in like 1, 2, 3 month ranges, and they don't see the full picture. But if you go into like the weekly and the monthly charts, you could see how well of a pattern this was. And that's something that I'm noticing more as well, like with SMCI and CELH and Accenture, and there's these other stocks that are just forming on bigger time frames that many people tend to look over. And yeah, I mean, like Chris said, once it breaks through after testing for a while, I mean, it's likely to go, especially when it's been going up and consolidating for that long on that type of time frame.
Yeah, and Nate, do you think we overuse the term crazy when we're talking about companies like NVIDIA and Meta and Tesla?
I mean, not necessarily. I mean, it's a crazy move. I mean, we're not used to seeing 100 to go to 200, 300, 500. It's happened. It happened in COVID. We had Zoom, ZM doing that. You had mRNA doing that, but we haven't really seen it in a while. So, like Judah was saying, this thing was building for a long time. And to kind of answer your question also, like, does it surprise you and stuff? I mean, they always surprise me, and it's always hard to chase them. It's always hard to buy that big gap up. And one of the remember Martin Shkreli, however you say his name. When I used to listen to his stream back in the day, when like KBIO days and all that kind of stuff, one of the things he said was like, we're always looking for the stock that doubles, right? And we're always trying to find the next one that's going to go. But he said something that stuck out, and it's most stocks that double again. And so it's one of these situations where you look at it and you're like, man, there's no way I can touch that. It just went 150 to 300. And then all of a sudden it's 400. And you're like, I know it's going to 500. I can't do it. And then it's 500. And like now we know where it's probably going to 1,000, but we're still going to talk about it here and we're never going to buy it. So,
yeah, absolutely. And I always say it's always the miss for me of 23 was, and we had it with, and I might be jumping a topic point here, but we had it when Zuckerberg was like he seemed to be like one of the most unpopular guys in the world, and Meta was at lows, and then all of a sudden just a complete reversal, and we've seen another crazy move there.
That was the first reversal, I believe. At least what I noticed, Meta was the first reversal, while like the markets and everything else was going down. Like this thing was like reversing and then putting in that base, and it had like a beautiful setup at the time.
Yeah,
and that was like
that was what, 90 bucks, $88.
Yeah, I think that was the best setup out there at the time. Also, NVIDIA, I mean, it's not so random. If you look at the fundamentals, like the earnings and revenue growth, they were growing.
Yeah.
They were year over year, they were negative at a point last year, but then like they became less negative and then went into positive territory. And like it's not a random stock, something new. NVIDIA we're familiar with. We know where it's been. We know where it's coming from, how being down it is, and the growth that it has. So like you put those two together, and you're in for a wonderful move.
Yeah, I think also the hedge funds too. To Chris's point with hedge funds, they want exposure to AI. So the only spot, the safest way, the biggest way to put money to work in AI is directly through NVIDIA. So I think that's everybody's just piling into that.
Yeah, absolutely. And so just to move it on, because I've just noticed the time we're rattling through. And this is great when you get, and this is links back to why we had the idea for this podcast, because when you get four guys chatting about their passion, the time just flies, and you're just having such a great time having that conversation. We also had at the weekend we had Boeing. I forget the plane, but obviously the door opened, loose bolts, all sorts of stories. When you guys are reading that news over the weekend, what's your first thought? Are you thinking like that's sad, or are you thinking I don't want to fly, or are you thinking actually Monday morning that might be the opportunity of the day. Let's go with you first, Nate.
I saw a funnier tweet.
I saw that.
Some guy asking if he considered insider trading if he was buying puts on the plane. So, I don't know if that is or not, but definitely an edge right there. Shit, now I completely lost train of thought. Fire me the question again.
I've forgotten what I've asked again. No, I just thought, you're watching the news over the weekend. Are you thinking about trading it Monday, or is your reaction just first? Actually, that's pretty sad, and I don't want to. I'd be thinking personally, I don't want to fly anywhere.
Yeah, no, I mean that's obviously scary, and I'm happy that I usually try to get the aisle seat. But I'm sure that probably changed some people's plans of no more windows, things like that. But yeah, no, I actually did not have any plans to trade it at all. It's very rare that I trade those types. Maybe at some point in the future. Again, I am trying to move along from small caps and then just focus on these Mara type moves, these big macro type. But it was definitely not something that I would typically trade. But there was definitely an opportunity there, obviously, with the gap up, wait for a base. And that's another example of, is it obvious? And no, let the news digest, wait for it. On Monday, it had a nice little base and it started to curl back up. Then there's an edge. But if you just come out firing, to take a trade, there's not really much edge until you get some sort of setup where you can have a proper risk.
Yeah, absolutely. And I wonder if window seats might be a little bit cheaper now moving forward. And that's the same question to you. What were you thinking this weekend when you saw the news?
I thought it was fake, or I thought they were on the ground. Like the first question people asked when you showed them this was like, in the air. It's like they were in the air, right? And it's like, I mean, as for the stock itself, I mean, Boeing was pretty much failing from before that even happened. It's not to say that like people knew it was going to happen, because that's impossible, but like the stock was rolling over anyway, and it's a slow moving stock. I had no interest in that, whether like to short it, to long it, no interest to me. And I mean, it's in general for like a longer term and a longer time frame. I mean, what's going to happen from here, from that event, I don't think will be so drastic, because it's not like they need to fix every single plane. It's screws, I believe, that had the issue, and like now other airlines are being familiar with the issue and they're fixing it. But it's not something that I think will have a long-term effect on the stock. I think they just fix it and it'll do what it do. But as for trading it, that wasn't for me.
And yeah, because planes are quite weird, really. My girlfriend recently, she flew, and she was near the emergency exit, and it was before they took off. It was just beeping at her, and she just didn't know what to do. She just trusted that like it was part of the plan, and it actually wasn't. It was like it wasn't shut properly or whatever. But you just sort of, it's just one of those like sectors where you just trust. You just trust that the pilot's good. You trust that everyone knows what they're doing. So when you see something out of kilter, it is quite scary. And Chris, were you thinking about trading it over the weekend?
So I did trade it a little bit. Boeing's a tough one with options. That's for names like that. I'm more of an options trader when it comes to the large cap stock. So Boeing in particular, you have certain stocks that are tricky to trade with options, and the reason is they have a big move and then they stall. And like part of the reason why that is for something like Boeing, it's one of the largest Dow components, and so it's between 3 and 5% of the Dow. And so you might have something kind of gapping down with Boeing. But if you have the Dow that's up that day, or if you have flows, like option flows, you kind of holding up the Dow or things like that, you have a lot of passive kind of buying absorbing. And so you might have something that had bad news that slams down all at once, but then it struggles to go any lower because you have this passive force kind of keeping it in place. So I got chopped up on Boeing a little bit. I think usually with those names, what you're better off doing is waiting after the initial news, wait for it to bounce, wait for the options to clear out, the premium to drain, and then try to join something. But trading it right off the news or right off the open, that's a tough thing with the way that those stocks move, and then with the option premium.
Cool. Yeah, no, thank you. And this might actually highlight perhaps the difference between some of you guys and me, because I thought the biggest news of the week was Nike. I don't know how it worked. I don't know who dropped who, but Nike parting ways with Tiger Woods, I thought was massive. And absolutely shocking. And I just wanted to make a tenuous link with the markets because there were rumors, and this is where I guess it's, you got to be careful buying rumors. There are rumors he was going to go to ONON, right? And then their CEO was forced to come out, and then we saw that fail. That's quite crazy. I'm probably going to use that word here, but what were your thoughts on firstly the Tiger news and then the impact on the market? Let's go to Nate first again.
Yeah, Nike I wasn't really watching. In the other one, I forget the name of the company offhand, but I was watching. Nice, steady grind up throughout the day, and then just boom.
Yep.
On holdings.
That's it. Yeah.
Yeah.
And that's that's like the latest. That seems to be the latest fad. I haven't tried the trainer out ON trainers, but it seems to be one of the fads. So I guess it did kind of make sense for him to move to perhaps an emerging.
Yeah,
emerging
I
company.
rarely trade those types of names on rumors and things. I usually like to have the news come out or earnings come out if I'm going to start to size into a trade like that. It's got to be something that, it's running into either a catalyst and then react after that catalyst, such as Mara today, or something such as I think JPM is tomorrow. I think the bank starts the report. Yeah, so. Just something like that. I will be trading it after they report as well as other banks. So, situations like that with Nike and then other rumors, I typically avoid unless there's like a quick rumor or a tweet that I can react to and it hasn't really budged yet. Then I might go for it. But for the most part, if it's already trending and nothing's certain, that's a whole nother piece of market risk that you're adding on to the risk that you're already taking.
Yeah, absolutely. And Judah, what were your thoughts? Do you ever think there's an opportunity to trade rumors like that?
I'd rather take the confirmation. I also thought he would be going to golf because he wore those Topjoy. I believe they're called Topjoy. He wore those in the past, and it's in the name golf. So, I mean, I feel like with rumors and things like that, you could kind of also see it like in the price action and how it holds up and things like that. But it's definitely not something to, take and have so much conviction off. So I usually just like to wait for, the confirmation. And then once the confirmation comes out, if it's big enough, the market knows that and they'll gap it up with volume. And that will be like, for example, an episodic pivot and something that I'd rather take rather than anticipate it. Because if it's not going to work out, then you're not just in for your set risk that you had in mind. You're in for like a gap down and something way worse than you anticipated. So, I mean, it's just not worth it. And if you think about it, we hear these things all the time. CYTK had some rumors and then it dropped off and then they came back with a different company. It's like things just continuously change. And especially in the buyout rumor world, that's not anything that I'd be interested in taking or taking a risk on.
Yeah, so you're just adding on more risk on top of the risk you're already taking. Same thing with swinging. If you were swinging things, anticipating approval, SEC with Bitcoin, different things like that, you just never know. And it's one more thing that could throw you off.
Yeah, absolutely. To be honest, I'm just shocked that Nike didn't have him on a lifetime. Like he's one of those sportsmen that just transcends the sport. And there's not many examples of those. You think of the top athletes, Serena Williams and Ronaldo. Obviously, you can tell by my accent, hopefully, that I may have different famous sports stars compared to you guys. And Chris, do you ever trade anything like that? Any rumors?
I do. So I had some Nike puts unrelated to that. There was a technical setup with it. And so I think that when that news kind of started dropping, it helped, but it was not one of the main reasons that I was in there. But that's a positive surprise to have occasionally when you're trading something and you have something that kind of helps it along. And that's definitely not. Tiger is not known for having peaceful separations with people or companies. So I figured there would be some fireworks with it. But yeah, I had a nice trade on Nike, but as far as like speculating on which company he was going to go to next, no, I no part of that.
But does that change your plan when you bought for a technical setup and then a rumor comes out and helps that? Are you now reacting to the rumor that came out, or are you letting your trade follow through?
If it's a rumor that helps me, then my plan doesn't trade much. It more just makes the plan easier. I usually just like gets to the target or whatever I had in mind faster.
Yeah.
But if something were to drop and like it got some support or it started going the other way, I would definitely cut that. I would be out of that because then I have another variable in my trade that I was not really planning for. And if I'm not certain about something, kind of like when in doubt, get out, and I can always, get back into something once I have more facts. But those are tricky. And I think someone mentioned, was it CYTK? Yeah. So there's a big difference between like rumors with large caps and things with options, and rumors on small caps or things without options. Because in the options world, if you can kind of pick apart some of that flow, you can a lot of times get clues about things, whether they're true or not, based on the option activity. And so with CYTK, there was something called a risk reversal that happened soon after that rumor speculation came out. And what that means is that someone went from betting heavily on out of the money calls to basically, selling those and getting puts on it. And so that's one of the strongest signals that someone is basically in the option world saying, I'm going from being bullish on this to being bearish on this. And it can happen from being bearish to bullish too. But you have things like that can happen. And then, you started to have some rumors fall apart today. And that was 24 hours after that options flow. And so that you can get some interesting clues from large caps with options on things like that.
And another thing that I want to note on the rumors situation is that you hear a rumor that, they're parting ways. You think he's somebody big, something important. And, off the bat, you may want to take that short on Nike for whatever reason. You think that he's a big star and that they're parting ways, so it's going to really affect it. But you don't really know, or maybe you do, but many people don't know the sales that run through Tiger Woods and Nike, and other people do. So like if you're trying to short it and it has an initial reaction of a pullback and then it starts to soak up, maybe people know a lot of things that you don't. And it's the same with taking rumors on, buyouts. It's like you don't know the price that they're going to get bought out at. So like, how do you know how far you take this stock? And sometimes, it's so fast of a reaction that you can't even like try to trade it off technicals because they're just like few candles and it's just back to where it was or even higher. Same thing with earnings. You never know where exactly the market will take it. And the reactions are just too fast to even think and comprehend what's going on.
Yeah, absolutely. I guess it's just there are always going to be people that know more than us, unfortunately, if that's what we're looking to trade. And obviously we are currently, so we're filming this in the second week of January, which means 2023 is still, it feels like a long time ago already, but it's still reasonably fresh into our minds. So trends in 2023, what stands out to the three of you? We'll go back to you, Judah.
So I think we had some, clean trends. I mean, a lot of people thought that we were going to go into recessions and just continue unwinding on the markets, but that didn't happen. I was surprised the way we ended. We ended really strong. And, you had a lot of those large cap names that just reversed and closed really strong into the end of the year. And there was tons of opportunity in 2023. We had a lot of these, liquidation plays, which I'm sure Nate will touch up on later. And we had some liquidity traps. There was a lot of action this year. And I think it caught a lot of people off guard. I don't think a lot of people were anticipating the type of market we would have compared to what we ended up with.
Yeah, it was certainly a year full of doom and gloom, and we're all going to be struggling. And Chris, just throw that question over to you. 2023 trends, what comes to your mind?
You had a really action-packed year. I mean, there was a lot going on. There was everything from the banking crisis and the scare with that. And I mean, that really shook markets, and that was a scary event. And then you had, just this wall of worry at the same time, markets were ripping. And so I think you had a lot of contrast. And I think that 2023, if you're looking at the last couple of years, 2022, start of a bear market, Fed cycle, and then 2023, you kind of had the Fed cycle, peak. And you had, kind of the right side of the move. So the market's starting to come back, but you have a lot of people who are still in bear market strategies. And so I think a lot of people who survived 2022 and early 2023, they were more short sellers or short biased. And so what happens is that you have a buildup of traders like that. And then once you start to get into a more normal market where things are ripping again, then I think, especially in small caps, you can see how a lot more squeezes happen, a lot more themes and liquidity traps and things like that play out because you have more short sellers than ever at the same time that you have demand coming back. And so you have a double whammy of, things go further than you think.
Mm-hmm. And does this come back to, you're talking about obviously how you prepare for a trade, you can have numerous options. Is it exactly the same when it comes to looking at the bigger market picture? Because like you touched on, anyone who was perma doom and gloom, they would have had a really tough year.
Yeah, I think, it's a little bit different as an investor, someone with a long time horizon. It's a little bit different than a trader, but I think for the most part, a trader has to be fairly open-minded. And it's not this thing, it's not like bulls versus bears. It's like that's a made-up narrative. It's basically, do you have money going into things or money leaving things? And just kind of looking at things objectively and being like, okay, what's in my circle of competence? What do I know how to trade? And waiting for the right setup. That's really what traders should be focused on, in my opinion, instead of trying to forecast SPY's going to this, or it's like you don't even trade SPY. You trade small caps on the short side or something like that. So I think just mostly focusing on like where is the market generally, but not about forecasting or recessions or other things. There's just not really that much money in that kind of thinking, in my experience, or from my perspective. But I do think that people need to be very aware of where you are in a cycle. And so, coming out of a bear market, you basically have to be like, okay, who's still around? What has been happening? And what seems to be happening now? And you can use that to kind of clue yourself into strategies.
Mm-hmm. And Judah just touched on liquidation setups, but Nate, what stands out for you in last year?
Chris nailed it on head on a lot of those things I would have said. I think understanding where you're at in the cycle is the biggest takeaway from, at least for me, knowing when to really show up, knowing when to come prepared versus like the hands-off approach. Because for a couple of months mid-year, I was getting in trouble a lot where I'm, kind of oversizing given the liquidity, and I kind of had to unlearn, things that I had done in prior years. And, you don't need to size everything. You don't need to scale up on everything. You need to get the meat of the move and move on. And not everything's going to be a home run. So really just kind of fine tuning that to line up with these market cycles, which fortunately we had a lot of like cycles go, fall off, heat right back up, fall off, heat right back up. And it feels like it just keeps on going and going. And the more hot cycles that we have, the more money's flowing around, the more people are going to be chasing stuff. So we've had no shortage of plays. Right now, yeah, sure. Maybe we're not having the 200% gappers every single day, but there's still 50, 70, 80, 100% gappers each and every single day. So, there's liquidity traps, which has been something that we've been talking a lot about, where you've just got that huge volume, heavy volume on day one, and then day 2, 3, the volume completely cuts off. But then you right back up to over prior resistance and you start to squeeze. We had a bunch of them in recent days where that second leg is, a quick double to 200-300% type moves, which is fantastic, not only for that trade itself, but for continuation of the cycle. So I would say that was big. I think the uncertainty, we had a lot of uncertainty in 2023, the wars, the bank crisis, like Chris said. So it's hard to trust everything. And then all of a sudden it just keeps on floating up and floating up and floating up. And you're like, how the heck did we get here? But I gave up trying to figure out, when the market's going to top and stuff like that. I think I probably spent 3-4 years thinking it was going to pull back, back in like 2000 and I don't even know, 12, 13, 14, you're always thinking it's going to pull back, and then it never does. So I think that's a waste of time trying to predict the macro. But I do like to have like a pulse on what's going on when things start to get a little out of hand. Like I almost use like Tesla or Bitcoin as like a euphoria index. And when Tesla's going straight up, there's going to be a lot of names, you've got like the CVNAs and the AIs and just all these speculation type plays that just start to kind of drag up with it. And as soon as that Tesla or the market or whatever pulls back, you want to focus on all those, and the air just comes right out.
Yeah, it's certainly a crazy year because in terms of like we've got numerous conflicts going on, but whatever seemed to happen, whatever bad news there was, the market just didn't care and just seemed to truck and truck and truck. And you just started on 2024. So what sort of shift have you seen sort of in the first 10 days? You touched on small caps. We've so far we've seen, like, in terms of gappers, we've seen actually it's been fairly muted so far in terms of we've had a few gappers and they tended to fade.
Yeah, there's definitely been a lot less gappers, but what happens when there's less gappers is everyone focuses on those. So they start to get crowded and then they turn into, bigger and better plays. We just had a handful of them this week where those secondary, the second legs, end up taking off like crazy just because people are not anticipating. It wasn't a huge gapper to begin with. It closed towards the lows. They're letting it work. And then all of a sudden, 2-3 days later, they were like, wasn't prepared for this. And so, that's definitely been a shift. But I mean, we've had, I think, 2 macro Bitcoin opportunities, right? Because the first Mara trade was right off the first maybe a couple days of the year, and then we had another one just recently. So, I mean, hopefully we have more and more of these macro type of trades throughout 2024, because that's where my confidence comes from. I have a very hard time getting confident in thin micro caps at this point, small caps. It's just not worth it in this gamified industry now.
Yeah, and I think particularly touching on that, like anything that, and then Chris has touched on, perhaps it is, whether it's crowded or not, we can debate that perhaps another time, but anything that just stops fading and then the liquidity just dries up, all of a sudden you just know what's coming next. It's just swipe and then it's on. And we've seen so many examples of that, and it's just the same as like the liquidity traps that you're talking about. And then Chris, just throw that question over to you. What do you make of the new cycle coming out of 2023 into 24?
Yeah, so I think, like, from a small cap perspective, I think part of the reason why we've seen so many of like those liquidity trap setups or squeezes or other things, it's if you look over the last year and a half or something, so many of these small caps are so beaten down that you have just anyone who was going to sell is basically out. And so, when they have a gap up or something like that, it's not like there's a bunch of like overhead, inventory or people looking to sell or, things like that. You basically have something that gaps up. You have a bunch of short sellers and you have no one left over from the prior cycle above them. And so it's like, who's really selling it? It's basically the people who are either short selling it or it's people who are, long from a lower base. But I think that kind of plays into a small cap cycle. So through 2023, you have a very thin offer. And so when you have a move that runs or, things that are happening, you have a lot more squeezes. I think as we get into 2024, that's going to reduce a little bit, because as you have more things like CVNA or UPST that have had a big run up and now they've pulled back, now they have that kind of overhead inventory, or now you have people in them actually looking to get out when they spike. And so I think you'll have a different kind of a vibe with that. And then as far as like SPY melting up or just markets in general, over the last couple of years, it's like you have to think about all the money in the world, the money looking to invest, where is it going to go? And in 2022, it could not really go into stocks because the Fed was tightening, and it couldn't really go into bonds because the Fed was tightening. And so if yields are going up, bond yields are going up, bonds are going down. And so if you're a fund manager and you're looking to put your money somewhere and you know that stocks are going to get hit, that bonds are going to get hit, real estate, in pockets is going to get hit, what do you do? And you basically, a lot of people went to money markets. And so people go to cash. And so they're making 3%, 4%, 5%. And so now that that's come down, I think you've seen a lot more money go back into equities. Now that the Fed has pivoted, you have a lot more money going into bonds again. And so I think we're at a much more equal place where money can decide which pocket it wants to go into instead of being forced into one pocket.
Mm-hmm. And from what you've just discussed, is it possible for you to make some guesses about the potential action that may happen this year? Can you make an educated guess from all that information?
Yeah, I think that you can. I don't have a huge bias one way or the other, but during normal markets, during normal times, the trend has been most money goes into equities looking for higher returns. You get 7 to 9% in corporate earnings growth. And so that's seen as kind of the rate that you're going after. And then, bonds have a 4 to 5% yield. And so if things get a little bit sketchy and you think that equities are going to come down or earnings are going to drop off, then people usually go into bonds. And that's like why bonds are considered a safe haven during a recession. So I think that as long as we have a relatively normal market, equities will continue to get bid, and bonds will probably make a slow drip down in their yields. Because if you think about like before COVID or even after COVID, up until the last 2 years, rates, bond yields and all that was at 2% for a lot of it. So I think that we'll kind of go back down to that long-term kind of average. And so I see equity markets continuing to be bid. But if you see a recession or something like that, you're going to have a lot of people pile into bonds while they can. And then, if the Fed, if inflation ticks back up, then Fed says they have more to do, then you'll see people go back to cash. So kind of just waiting for pivotal moments like that. And then like CPI reports or inflation reports and watching bond yields and auctions, you kind of get clues along the way of where you're at month to month.
Mm-hmm. No, so that's great insight. And Judah, just throw that question over to you as well.
I mean, we're only 10 days into this year, but what I've been noticing more, especially in the mid and large cap, are breakouts are kind of working right now. Things that are breaking out are going, over the next 2-3 days higher. And as for small caps, like Nate said, most of these gap up on news are completely selling off. And we have these few stocks that have had such a drastic sell-off of that morning gap that like the next day it just completely recovers. We've had that with Alt. We've had it again with VYGR. We've had it with DYN. And there was one more that we had it with. I forgot it was on Nate's scan like last night or 2 nights ago. But it had that same thing. It had that gap up, came back down to like pretty much undercut where it opened. And like Dine hit 30 in pre-market, came down and hit 12.50, which was like lower than the prior day before the great news that they had. So we're seeing like a lot of those just people selling maybe for no reason, and then it comes back up because it just overshot the sell.
Mm-hmm.
But as for those gap ups,
DB,
yeah, they haven't. They've just been getting sold off, and like we've seen in the past that these have either held up or done something, but not this much where it pulls back to like where it either opened or the lows from the prior day. And what we've been seeing more in small caps is either the liquidity traps, and something else I've been noticing is these random stocks that are like grinding up 300, 400, 500%, like SWVL. You have these stocks that like doesn't have much volume to begin with, and you don't know why you're going to take the move or why it's going up, and it doesn't really provide an entry, so it's not really beneficial to me. But you have these stocks that are just grinding higher for who knows what reason, and reverse splits is also something that have been doing well in small caps. So it's really just like a bunch of these like random kind of moves, not so clean. But with the mid and large cap, I've been seeing more breakouts and trends forming, like clean trends.
Mm-hmm. And that sounds like something that you're going to enjoy, Judah.
Hopefully, if it continues. I mean, it goes hand in hand with the market, and the market's, we're here near 52-week highs, so we'll see.
Yeah, I would say what he said is absolutely true with the clean trends. Like the charts are doing what they're supposed to be doing. Like when you see a setup and like when this happens and it consolidates and it's supposed to take on that next leg and go, it has been on a majority of these plays, which is not always the case. Usually you get in this perfect setup and then that's actually it's a fake breakout and then it's a sell-off. But these have been very, very clean.
Like
I would say the last like 4 or 5 months.
Like TGTX is a good example because it had a gap up back when the gap ups were working, like a few months ago. And then it had this like very tight wedge range, broke out and just kept grinding higher. I think it went from like 10 to 20 and then, came back down a little bit, set up again for a breakout recently. Like I think some point last week it offered an opportunity, and over the next like 3-4 days, it made like a 15-20% move. And then it had this pullback off, the results and the news that it had. But without that, I mean, who knows where it could have went. But the news is what caused that pullback. Other than that, we had that clean trend and the clean breakout. And that's what we've been seeing more of.
Yeah, I think too in 2024, or at least late 2023, biotech as well, because it was beaten down. And then there's news that comes out, but most of them are not really either moving or they're raising money extremely quickly. And now that IBB has rebounded hard, now you're starting to get a lot of these moves. And SLDB that we were just talking about, TGTX, has just been some insane reversals off off the lows. So
and they're holding.
Yeah,
Like
and
they're holding
understanding
big
where you're
gaps
at in
for
that
months.
macro kind of, again, going back to sector and theme, that's where there's a lot, I would say, safer, better trades than, trying to figure out a small cap that has 1.5 million float and it's trading 80 million shares.
Yeah,
Yeah,
another thing to focus on with the biotech is how well they hold when they have those massive gaps. Like IMGN was holding for months, put in a pretty good range, got tight, and they ended up getting acquired.
Yep.
But like you see these things that are just gapping up and holding. Like some of them do fail, but you gotta really focus on the ones that do hold up over weeks and months, because something's going on there that's more than just what you see on the front side of it. So that's something to focus on the biotech side, is like things that are just refuse to go away over a long period of time.
Yeah, that's great. That's great insight. And yeah, there's certainly I don't know. There's a cautious air of optimism about 2024, I'll say. And whilst we're talking about this year, it would be remiss of me not to ask goals. How are you guys looking to improve your trading this year? I know you've spoken about it quite a bit, Nate. So let's go with Chris first, and then we'll go to Judah.
Yeah, Nate did a great write-up just for his own, journey of the goals and laying it out for the year, and that I think it inspired a lot of people to really think about where they're at in their own career and what's important to them and what to focus on. So, not only developing and improving as a trader, but like as a person, and what are you actually trying to do in life, and focusing on that. So, for myself as a trader, I definitely want to focus on becoming more structured. So I dabble in a lot of different like markets and areas and everything. And I look for like a confluence of factors to all be working at the same time. And then I can, join something or trade something. But I think that, writing out multiple pages in thorough detail about, every single part of a trade that I'm looking for, instead of like, this has, 8 of the 10 elements I'm looking for, but I want to know specifically what's the timing, what's the volume, so becoming much more structured in that. And doing educational content for investors on the ground has helped me to do that, because if I'm doing a video on liquidity traps or something, which people can look up on YouTube if they want to learn like specific setups that we're talking about, I have to go through and think about what's like the retrace level, what's the volume doing, what's this level, what's that. So personally, I want to get a lot more structured with my trading and have every single setup that I do basically mapped out in thorough detail, instead of just going after something that looks pretty good, but I want to know more specifically, why does that look pretty good?
And does that involve perhaps a bigger focus on what your A grade setups look like and focusing on them?
Yeah, I think it's just kind of like saying it out loud, because a lot of times as traders, there's so many nuanced things that we kind of have in our heads, and like, we kind of know it when we see it, but in order to actually thoroughly understand it, I think it helps to be able to not only recognize it, but to be able to teach it to someone else, or to be able to, write it down. Like, could you write, a total essay on this specific setup? So really just, getting into granular detail and being able to teach it to someone else, I think that helps us to really master setups.
Mm-hmm. I always think that's one of the first things I say to people if they try and talk to me about a setup. I just ask them, like, what have you written down about it? And if they haven't got anything, that's an immediate red flag for me. Judah, 24. Are you excited about this year?
I am. I think my goal this year is to push a lot less buttons, catch like meat of moves, and kind of be like a AI robot. So the robots, they have a set of rules and they just follow them. But the AI robots, they learn from that. They learn from the questions and the answers you give them, and over time they learn. So I want to be flexible, but I also want to be sort of a robot in terms of my rules, and not be too, out of whack and too big of a lunatic, just trying to chase things, trying to just do random things. I want to cut that out. I want to just take something and completely follow the rules and have no randomness within the trading.
That sounds good. And Nate, you've touched on yours. It's absolutely great blog post, and I don't know, I'm sure you had a lot of impressions on that. It seems to have really provoked a conversation. One thing I've sort of been intrigued by is because you've spoken about it from, father of 2, very successful, you're in your 30s, and you're perhaps talking about it from that point of view. But I also think it applies to everyone. Like, do more of what you're good at, more of what you enjoy, and less of what you don't, right?
Yeah, it's very easy to get lost, especially with social media nowadays, and always feeling like you're not there yet. And sometimes if you just take that step back and give yourself a little bit of credit, I feel like most people that come into this thing feel like they need to be this superhero, great, amazing type of trader. But the vast majority are just trying to get an extra paycheck. They're just trying to get, some extra income. And I think that gets lost. And I think a lot of people put pressure on themselves just to be, perfect and great and keep on getting better and better and better. But there's a cost to that. And, you have to just reevaluate if that cost is worth it to you. And it may be, yes, in your 20s, like, go for it. And then 30s, same deal. But once you start a family, there is a cause and effect. And if you're taking too much here, you're probably not, keeping up to where you should be over here. So that's just something that I've been personally working on. And there's a lot to unwind. There's a lot that I've always done. And obviously we've got, lots of great talent here. And if we'll know when Judah beats our news AI that he is
Gave up on that.
We'll know that Judah AI version of Judah is now
that part of me is long gone. I moved on. I can't beat it.
But yeah, no, I mean that likewise with what they were saying, I want to just be trading less, and even smaller has been fantastic. I felt a lot better, and you're getting the meat of the moves. You don't have to watch every single tick. Focus on your entry and let that trade work. And if you want to explore another setup, great. But I've been, pulling up names that I'd like to trade, and then I just don't even bother with it because I have 3 or 4 that are working anyway.
Mm-hmm. Yeah, no, absolutely. And I think in terms of we've already seen, because I've heard you say this, like something similar before in terms of less time on screen, but this year you seem to, I don't know what it is, but you seem to have really applied yourself absolutely immediately. And I've already seen that with your charts, just really clean, a few names, patience, let the winners work.
Yeah, I think, part of it's a me problem, and just like trusting and letting other people kind of take over different roles and, let others shine. And I think that as you've seen over the last maybe month or two, people are really stepping up, and, it's good to see. And it also, sometimes if I do too much, then maybe people don't bother, kind of adding as much value as they potentially could. And then when they see the opportunity to do it, they get, the responses, just like Stan never posted. We just pulled him out, over the last year. And he's a fantastic asset to the room.
Yeah. Yeah. And I think now we're sort of IU is just becoming it's just so much variety at the moment. There's numerous scans by numerous people every night. There's just so much going on. And like you touched on, we've got 3 or 4 people doing broadcast every morning. There's just absolutely lots going on. And then moving on, so 2024 just sounds, I said just like quietly really optimistic. And for me, I just want to, when I reviewed my trades of last year, I just realized that, a large percentage of my P&L came from, a very small percentage. And the rest of the time I was just sort of just wading through 50-50 and mediocre setups. And so a lot of my goals are really kind of similar to you guys, and just to press less buttons, but when I do press them, just press them really hard. And while we've got Nate on here, we just want to get into a bit of a friendly debate. And often, particularly in IU, we'll have Judah and Nate on the opposite side of a trade. So Judah, what's it like? How does it feel?
It feels good because it means, I'm doing something right, because Nate's not taking a trade that isn't overextended. I'll be happy to be in that trade as long as I'm in early and it goes overextended. So, usually there'll be these trades that, I buy because it broke out of a certain area, and 2, 3, 4 days later, Nate will recognize it as a good short opportunity, and my stop loss hasn't hit yet. There was no reason for me to get out, so I'm still in there. And he would be looking for a short opportunity, which is exactly what he should be doing. But at the same time, he's not looking for 100% move to zero. So for me, what I learned is that I have to ignore that or at least learn from it from his perspective if I want to learn more about the short side, because it is a very good type of trade. But I shouldn't be afraid just because he's looking to short it for a day or even a few minutes or seconds, like whatever it is. I know a lot of traders get afraid of that, and they're on one side of the trade, and just because Nate's on the other, they'll exit a position or they'll get like very worried. And some people will ask me like, what do you think about this? I was like, if your rules are your rules and you haven't stopped out, like there's no reason to stop out. Nobody knows what the market's going to do, and you got to just follow your rules and shouldn't have any persuasion on you.
And I guess you're effectively saying that you just got to really be aware of your time frame. And then if you're on a longer time frame than what Nate is doing on an intraday basis, just say as an example, isn't necessarily relevant.
I mean, it even could go as deep as intraday. Like if you have a really good entry off morning open, and you're just looking to be there for a day because it's a it's a mean reversion, or you don't feel like swing trading, you could still be like, if you're early, let's say something's $27 and it goes to 30, but it's just been grinding, it's not so extended, Nate could still look to short that while you still want more from that move. And maybe you peel some off, but ultimately your stop's lower than that. There's no reason to get stopped out. So it could go on any time frame. Generally, yes, the longer time frame is where it's at, but any time frame it is, if it doesn't hit your stop loss and your rule, don't let anybody else stop you out of a trade.
Mm-hmm.
Yeah, and I think it's healthy too. Especially for Judah. Let's just say he's long, and then I start to get interested in short. Maybe he's not even thinking about taking any off, but he's like, you know what? This is probably a good spot to trim some and then potentially rebuy it on the dip. And on the flip side, when he's repetitively saying like, hey, here's support. Oh, it held support again. And like, I'm waiting for that support to break for the next leg down. It's actually healthy for me to see that, because then it reconsiders, wait, am I just, trading what I want to happen? Or am I ignoring the fact that, yeah, he's got a point. It's held support 2-3 times now. And if it tries again and it rips the other way, I'm screwed. So it's definitely healthy to have both sides, just to reconsider, not necessarily get in your head, but reevaluate.
I think that's what's great about IU in terms of like the broad traders that we have, because you two will just be chatting key levels all day pretty much. And actually, like a level doesn't really mean short or long. It just means this is a key level and something to watch on. So if you two are highlighting that, then whichever way your bias is,
yeah, like
an
opportunity there.
I think they're actually beneficial for longs too, because a lot of times I say, listen, as long as this base is, I'm not interested in a short. I need to see it break under that. And there's a lot of traders that use those levels as longs and let it ride. And I probably should too, but I haven't figured that one out. Max has.
Max needs to build that algo for you, right? And then
so this is like similar to when I give SPY levels. And like when the SPY is moving down really quickly, I'll give those levels and I'll say like this level below. And it doesn't mean that it's like that's next, that's coming. But it's like if this level that I just gave now fails, tries again, fails, and fails to follow through, that's a potential level to see next and to use as either to go long or to cover your short, or it's just a level so you're aware of it. It's not necessarily where it's going to go and where it has to go, where it needs to fail or bounce, or like nobody knows. It's just a level to watch what it does. And based on what it does around that level is what you decide to do with that trade. Everyone trades differently, and that's what differentiates us from traders, because ultimately we all have the same levels. We're all aware of key levels. We're all aware of, like, for example, on a daily chart, a flag breakout, it's not hard to assess. Like many people see a good chart. It's really what you do with it that matters. When you take it, when you sell, when you stop out, that's what makes us all different as traders, is your rules within that trade. But seeing the levels, seeing the charts and the patterns, everyone knows what a cup and handle is. Everyone knows what these things are. So it's all up to you ultimately. These are just like key levels, and so it's what you do that matters.
I think too, when you plot those levels, you don't have emotions attached to it, right? You're putting in those spots. These are going to be key levels. And when it comes down to this, I probably should reconsider. When you're actually in the trade and you're scaling up, there's a lot of emotions involved, especially when it starts to go. And you're like, oh man, how much further can it go? And you start to turn, it's blind eye to like the fact that you're at support and you should probably have, another minute before it's just going to swipe the other way. Mm-hmm. So it is a good visual reminder, like, hey, this is where before you were emotionally involved, this is where you thought it could go. Why are you, trying to hold on size for the next level when you probably should be trimming?
And sometimes just putting your limits out as well can be really helpful when you're perhaps not a bit emotionless and you're not so attached to it. Because as soon as it gets to that level, you're almost thinking, well, I don't know, maybe this is just speaking about myself, almost get like a little bit greedy, but what if it cracks and it snaps really hard? Yeah. But then how many times does that actually happen? A lot of the time.
Yeah, and even when you do fill, when you do put them out there and you fill, there's that moment for like 2-3 seconds, you're like, I knew I shouldn't have covered. And then a minute later, you're like, I'm glad I covered.
I'm so good. Yeah, exactly. And then Chris, let's throw it over to you as well. In terms of ignoring noise, are you pretty good when you're within a trade?
I usually try to be, mostly objective, but like they were just talking about, I think it's very healthy to, when you're trading something, to not be all, bowled up or bared up about something, but just to trade it objectively and to try to look at it from both sides. Like if it's ever a slower day in the market or you have a slow moving trade, like do a mental exercise where imagine, let's say, you bought something long and imagine that you are planning on trading it short, even though you're in it long, and just look at like, okay, what am I looking for if I were to want to short sell this? Like, is it, bumping up against this resistance? Is it peaking out and kind of weak? And so like flipping your perspective mid trade, as long as it's something that's, relatively slow moving or small size, it's a really good exercise to help you be more objective, because then, you're not seeing something as like, oh, this is my bias and this has to play out. But you're like, I happen to be in this because this is a setup that I recognize. It has a good risk, reward, and probability to it. But if you can flip your perspective, not only before a trade, but also during a trade, I think that you'll be able to manage things a lot better. And so like one example of this is, let's say Judah's long something and, it's a little bit overextended and Nate might be looking to short it or something like that. You could also have hedging strategies where, let's say you've been long the crypto stocks from like a low base and those are ticking up. But let's say you've had that position for a month, but let's say, 1 or 2 times a week, you got a good setup to actually hedge your own position or to, capitalize on some of the downside. And that way it smooths out that ride for you. And like, I remember doing that during the banking crisis when a lot of names were like slamming down. After 2 or 3 days of them being overextended to the downside, I would hedge some of my positions with calls like near the lows. And, if I would get that pop up or whatever, then, it wasn't as painful because I still had a longer term position, but I was able to get some of that volatility along the way. So I think being able to flip bias and doing mental exercises like that really helps.
Yeah, no, that's a great point. Absolutely. And just to move on in the interest of time, what are your thoughts on copying traders versus finding your own style? Let's go to you, Judah, first.
I think you have no choice starting off to copy traders unless, it's going to be a very rare circumstance, but anywhere in the world that you work at or where you go to, they try to mold you. If it's in finance and real estate, you'll be working under somebody and you'll be coming out of college. You don't have much experience. So they look to mold you into, who they want you to be, or you look to them because, they're at a high role and they're at a place that you want to work at and very prestigious company and role. So you try to learn from him and copy him and be him. And that's okay. As long as you're getting the right things out of it morally and, statistically, and if it's working for you, which is the most important part, because not everyone is an aggressive person. Try to be somebody who you're not, you'll fail no matter what. And I think it's okay to copy somebody else's trading strategy, but you have to be real with yourself and understand if it's working for you or not. Like I touched up on this in my interview, and I was saying that like after 3, 4, 5 months, it's a short amount of time. Like if it's not working, it doesn't necessarily mean that you have to switch your whole strategy up. It just means like understand like what what is working and what isn't.
Mhm.
And you have to just, you got to be real with yourself. And if it's not working for you, you got to either learn from somebody else or pick out what is working for you within his strategy and just twist it around a little bit. It doesn't need to be exact.
Yeah, I think that's the key point, because I remember when I first started, I was basically long only, and I just remember getting stuffed on so much, and then Nate was on the other side laughing, sharing really beautiful fades, and I was thinking, actually, that resonates with me a lot more than what I'm trying to do now. And actually, like, I'd never say that I've copied Nate by any stretch. I have a good understanding of what he does, but I've certainly taken like a few % of what he is and tried to mold it into my style. And, I've done that with numerous traders, and we talk about this quite a lot, Nate. For example, you're quite famous for having a really small starter. And then when other people do it, they're like 50% of their position or intended position. And they're like, why am I getting ripped on and taking massive losses?
Yeah.
Right?
Yep, absolutely. I saw a quote recently that like you're supposed to emulate, not copy, and you just take a little bit from every single person, and then that's going to model you into the best version of yourself. And there's like little pieces that you can take and strategies that you can take on special setups from all these different people. But if you just focus on that one thing and try to copy it, it might not fit your personality. It might not be for you. It might not be fast paced enough. It might not be the risk might not be in check with what you're looking for. But you just gotta I never stop learning. I'm always, anytime people post charts or any of the people that I kind of look up to, I'm always trying to figure out like how I could have traded that better and what I could have done. It never stops. But that doesn't mean I'm going to go and like Lucas and buy 35,000 or 50,000 shares of Boeing and just flip it for a couple bucks. That's not me. That's not my personality. But there was a trade there. There was a nice little base that formed that I missed, and it had a nice little rebound. So, what could I have done better on a particular trade like that?
Yeah, flip it for a couple of bucks and make enough money to buy a luxury car. Yeah, it's not bad, is it? And
I have to run, by the way.
Oh, you gotta go. Right.
I do. Thanks, guys. Have a fantastic
day.
Appreciate it. And Chris, just to perhaps wrap it up, this topic, how did you become Chris in trading wise?
Like my style?
Yeah. Did you copy someone, or is it all self-engineered?
No, I modeled after a ton of different people, but it took a lot of time. So I've gone through different phases of, I started out as mostly a speculator, and a speculator is someone who basically bets on outcomes. And so you're taking the expected value calculation and you're applying that to like an all or nothing kind of scenario. And so I did that with commodities, and that was how I got my start in early 2016. And basically, with a style like that, you're looking at people who are financing companies in the commodity space. So an example was gold was running. And so what I would do is I would look on YouTube, and I would look at a bunch of people who were successful gold speculators, or people who were CEOs of mining companies or financiers of mining companies. And you basically learn the business, you learn the strategies that they use. And that's how I got started. And then after that, it was really modeling after, the Buffett and Munger, the value investing. And so I would watch all the Berkshire Hathaway meetings. And so like you get to basically step into someone's persona or someone's mindset about something. And then I came to trading a little bit later, and I would do a lot of parabolics and special situations. And then I got more involved with options, and I got more involved with macro. And so you just kind of like pile these things on, and you become like a Swiss Army knife. And, at least for my style, I like to be able to work in a bunch of different markets and conditions, and, things that are long, short, bonds, stocks, crypto. Like I've traded NFTs. So I like jumping around, and that's kind of my personality. I like being, in a bunch of different things, but, it might work better for some people who are just, scalping one strategy. And if they're consistently profitable, then from a market perspective, the money that you make doesn't care where it comes from. So you just have to match your personality with your trading style, and whatever, works.
Mm-hmm. No, absolutely. That's such a great evolution, though, how you just went through that. That's fantastic. And I think that might just wrap up. Well, we said we're going to keep it to an hour, so I think we might just wrap up today's episode. Thank you both. Thank you, Judah. Thank you, Chris. Thank you, Nate, as well. And then moving forward, any questions for Judah, Chris, and whoever our special guest is, please use the comment section below. Thank you for tuning in to the first episode of Trading Takes. Thank you, guys.
Thank you, guys.
Thanks, Sam.